All right, folks, it's Monday, and today is the 6th of January, and we've got a lot to talk about. First of all, we had the airstrike in Iran on, I believe it was, Thursday night or Friday night? It was over the weekend. Either way, the head general of Iran was killed, and there's a lot of friction right now with U.S. and Iran. And the question is it going to be sustainable? Is it going to start a war? Is it going to cause volatility? Is it going to cause more spike in gold and interest rates? And here's my answer to you. Before I get into it, let me talk to you about the week in advance and what the big reports are, and then I'll talk about that issue, because I've been getting a lot of emails and questions asking me, Roger, what do you think? How do you think this is going to wash out? And so forth and so forth. And I think I have some good answers for you, but let me get through this. The big report is going to be tomorrow. It's going to be international trade, and a lot of more investors are going to be looking at international trade, especially in light of what happened over the weekend with Iran. And also factory orders. Factory orders are big because they're going to tell us, they're going to impact the future of the growth of the economy. So it's another major report to look at. The petroleum status report is going to have significantly more weight than usual because oil prices are rallying based on the news. And then we have jobless claims and employment situation, where usually those reports would be the biggest reports for the week. But quite honestly, the economy has been humming along very, very well and very predictably. Unemployment's at a 60-year low. The numbers have been just very smooth and uneventful. And honestly, with the Fed giving projections several months in advance, I'm not expecting anything major to happen. I'm not expecting unless the Fed starts saying that we're going to do something that we haven't done before, or we're going to have 3 rate drops this year, something unforeseeable, something that's not priced into the market. Not really expecting too much this week. I think right now the big driver is not China, it's not the economy, it's Iran. I think that's going to happen for the next few days. So let's take a look at the overall market. Now, as far as the overall market, you would barely know that there's been a global conflict. The S&P is just off by very, very little. And even last week, we didn't seem to really go off that much. We're still within 0.5 percentage point of all-time highs. And we still remain overbought, as you will see by my fancy schmancy relative strength index scan. That's telling us that markets are grossly overbought, and I am predicting before any major upside in the market that we're going to see a pullback to the 50-day line or lower. I've been saying it for about a month. We haven't really gained too much traction. We've been seeing narrowing of momentum, which occurs when less stocks are moving higher, but the market keeps moving higher. So the engine is working harder, but there's less horses pulling the wagon, so to speak. So the question is, how will this, would the killing of the head general of Iran impact the global economy? Well, let me tell you something interesting. Interest rates are supposed to be rallying right now. We went 1 bar out of the weekly range, and we're already sitting on the lows of the day, and we're barely up. As a matter of fact, if you look at the intraday data, I mean, this is already reversing, and it can't even hold up, and it's like literally the first Monday of the conflict. So the bond market, it's not pricing it in. As a matter of fact, it's already trading. It's already hitting. If you could see here in real time, the bar just turned from green to red. This is not a bullish sign. This is a 2-3 day type of a reversal that should continue moving lower. And as a matter of fact, as I expressed, I don't think bonds have a lot of upside. And if they did, this global event should have rallied them a couple of basis points. We didn't see anything even close to that. And since we've been talking, they already went from being positive to being unchanged. So I'm not seeing anything major there. Now let's look at the gold market. Now the gold market is making a 6.5-year high, but again, it's already turning down, and we've only seen a rally for 2-3 days. So based on what I'm seeing right now, and again, we're still seeing sector fragmentation. Technology still number 1 place, but consumer discretionary is right along with consumer staples. That's like the most bullish sector and the most bearish sector being neck to neck. That's telling us that the market is still fragmented and overbought. That's what you're seeing. You're seeing the rubber band stretched out and then pulled back just a little bit and then stretched out again, and then pulled back and then stretched out till it fully contracts. It's not going to be very expandable, so to speak. And that means that the price action needs to go to the 50-day moving average, maybe a little bit lower, maybe a little bit higher, but we need to cool off, and the market's not there yet. I got to say, this market is extremely strong to see a global event of such proportion not even pull it back or expend the volatility, but we haven't seen any of that. Look at this. The volatility over the last 2 days has been exactly the same as over the past few weeks. So the fact that volatility is not expanding is a somewhat bullish sign. Now, again, gold, we did see a huff and puff rally, but again, it took us to overbought markets. We're seeing, let me show you something here. We recently saw this on the S&P 500, and we're seeing this here as well. Look at this. Uptrend, right? And then look over here. Downtrend. That is when you see price action move higher, but momentum levels can't sustain it. That is divergence, and that's similar to what we saw in the S&P 500. And right after we began seeing that, the market really stalled out. That is telling us that gold market is not just overbought, that it can't sustain further momentum to the upside. And remember something, we're looking at a weekly chart, and weekly charts give us a lot of fundamental data in their price. So I would not be a big buyer of gold based on this data. As a matter of fact, if you look at intraday price action, we gapped up in the morning, and right now the gap is about to be filled. So I'm not seeing anything major at all, except for divergence on a weekly basis, which is really important, and reversal of price action already. And today's the first Monday after the holiday and that means fund action is in, and this is important. Let me explain to you why. This event happened over the weekend. Funds were off last week because it was a fragmented week. It was a holiday week, but funds are now back in the market, and they're trading. This is the first full week of the year. And fund activity is very demonstrative of what we can expect. And according to the market right now, this Iran-U.S. crisis is not going to be sustainable for more than a few more days, unless Iran retaliates. If they retaliate, that's a whole different story. That's something unforeseeable. The market can't price that in. But as of right now, this market is completely shaking off what happened over the weekend with Iran. The U.S. stock market remains bullish. Gold is dropping in real time. Bonds can't sustain a third up day. So as far as I'm concerned, the market is shrugging this off completely. Hope that helps. Folks, today was a big day. I mean, a really big day. My friend Rob Booker went live, and he showed you how to generate automatic income. Just a few clicks. I mean, like what, 2-3 clicks? Mind-blowing. He explained how his automatic income process works, and specifically how you can collect significant income, I mean thousands in many cases, every single week. Can you imagine making thousands of dollars with just a few clicks every single week? It's mind-blowing. If for whatever reason you missed it, don't worry. It's not too late to get all the details. He's made a replay available of this event for a limited time. You don't want to miss it. Follow the link below to watch it now. Talk soon.